All right, so we're going back in time, and we're going to do the video the way we used to do it. We're going to start with the Dow, the NASDAQ, the S&P, and just kind of look at things, and then I'm going to go over a couple of trades that I was in today. Yeah, I did place a couple of trades, and that's Letter X, U.S. Steel, and DraftKings. Yeah, I put a trade on the DraftKings, and I'll show you what I did. So let's look at the Dow, and the Dow, the NASDAQ. The Dow was up. Hey, thanks to Disney, right? That's Disney, unbelievable. Dow up 47 points. NASDAQ's down. S&P is down. Even though the NASDAQ is down, the S&P is down, look at the price action today. Look how it just kind of bounced off that floor. And, if the market was open maybe another 15 minutes, these things wouldn't be in the red at all. The Dow was up in positive territory around 130 and just kind of stayed that way for the most of the day. So let's look at the heat map. See what's popping. See what's popping on the heat map. Microsoft, I sold it a week ago. A little disappointed. Now it wants to kind of run. It was one of those positions that I sold, and I basically raised cash for something else to buy that had a little more alpha to it. But it kind of was painful when I got rid of it. And of course, I'm into Google and Facebook. Google, yeah, I'm happy. I'm sad. Happy, sad. Amazon. So look, the FANG is actually kind of working stuff for Facebook. Facebook's down, because the 48 judges, they're trying to sue Facebook for being so powerful. Whatever. I don't think we'll see what they do, but I think people are just nervous in Facebook. They're probably doing like I did. Hey, Facebook's kind of weak. Even though I like it, I could use this money for something else. And so they just kind of selling it. Not that they thinking it's going down and just tank to zero or something, but just, there's so many other plays out there that you can actually be in. So being in Facebook, you're kind of missing out on that opportunity cost. You know what I'm saying? It's costing you. All right. So, so I got out of my I'm not all out, just some, and raised money and hey, let's talk about Letter X. It's perfect. Okay. So, hey, Letter X, U.S. Steel. I showed you the chart a couple of weeks ago. This is the weekly. This thing is finally the downtrend appears to be over. I could draw this trend line so many different ways from here to here, right? It just, whatever, kind of like that. But bottom line, you can see what's happening. It's kind of busting through all three, starting to head up, slow moving average, fast over the slow, stochastic, everything's looking good, volume. So, hey, I've been trading it, good premium and options. All right, so I did two trades basically in this. I bought 100 shares. Let's go to the minute chart. And, I almost caught the bottom here. I was actually watching this. This thing was down 7%. Yes, down 7% or so. And right in this little thing, I was like, oh man, this looks like it could be the real deal. All right. So I got in somewhere around there and I bought 100 shares and I also sold the call against it. So that's a covered call. And I sold a naked put. All right. So I can't remember my premium. So, and I did it on this December 31st. I wanted to be in and out or out of the trade before the new year. All right. So I got in somewhere around $18, like just below 18. I can't remember exactly. And I wind up selling the 21. Yeah, I sold the 21 call for 32 cents over here. All right. So, couple of days, 20 days out, 30, I don't know, but I got a little premium. I was like, hey, I bought it for 18 or 17 and change, and that 30 cents will help lower my purchase price. And, I don't look to be in it longer than 21. I don't mind capping my gains to kind of make me feel a little bit more secure about my purchase, actually getting a better deal. Just more, for the most part, trying to lower the cost. Now, the trade where I was actually trying to make money at the same time, I sold a 17 put. Now, I want to own it. So if this were to just go down and I'm assigned the stock, fine. I'll take it at $1,700, $17, which will cost $1,700. And I was to sell calls against it. And, because the premium, I'm liking it. I sold this 17 for, what is it, at 92 cents? I sold it for 92 cents, right? So you can see it's already at, like, for the most part, we'll call it 65. And so that trade is working out as well. So If it were to go down, I would still own the 100 shares I bought, and then I would own a new 100 shares at the cost of 17 minus 92. What's that math? I know that sounds easy. I can't even do it on the calculator. 17 minus 92. 1608. Yeah, I would own it at 1608. And the way this chart is looking, man, shoot, that's a great buy, right? That's a great buy. I think the trend could last longer than 20 days. All right. Now, it's very volatile. That's why the premiums are paying like that, because this could be volatile. You know, I remember you can get your ass kicked in US Steel playing this. That's why the premiums are juicy like that. But I want to own it, so I'm going to go ahead and get in there, sell that put, buy the stocks, and sell a call against it. All right, so the next stock I actually bought was DraftKings. Yeah, I was watching this. You know, I'm looking at the monthly. Not a lot of data here. And let me clear all of this stuff out of here so you can see what I'm going on. And I'm liking actually what I see. You know, we had this big down month. Ugly, came down to support here. And now it's trying to make a comeback. But the whole thing is still in an uptrend. When I look at this, I'm like, wow, you know, it's just something to look at, because I haven't really been pulling out the monthly on the stock because it's kind of new. You know, so let's pull up the daily. Let's pull up the, see the weekly. Kind of see what's going on. It's really struggling at this 50, right? Little doji candle right at the 50. And remember, this is where they did the secondary at 52, and I basically predicted it's gonna be a struggle here. All right, but it's holding it, man. That's a good thing, right? So it comes up here, right, and then it holds that level. It's not selling off. Nobody's getting the F out. Right, it's just shuffling shares, trading hands, and eventually all the people that want to sell is out, and it's still at the same price. And all the people that want to ride it higher is in, and start going higher. And then everybody that sold it, they're going to want to get back in. And then people that just wasn't even in stock at all, they're going to want to get in. And then higher prices we go. And that's basically how it works. So I'm looking at this. Looks like a mini cup and handle too. So, yeah, that's what I did. So what did I do with this trade? I actually bought the stock. I bought 100 shares. I bought 100 shares for 5,000. And the same strike I was playing with, I sold a 51. I was going to sell it at the money, just because I'm just trying to get a little bit. I'm not trying to be greedy. So I sold the 51. I sold it for like $2.95. I remember that one. And then $2.85. I sold it for $2.85, and it's probably right about there right now if you look at the mid. So I'm out. I'm going to lose my shares if the thing goes over 51. If it doesn't, because I bought the shares just, I think it was like 49, something like 87, right? So if I would minus that 2.85, I really got the shares for $47.02. Okay, so that's basically what it cost me, right? And that's right here at the bottom of the range. It's kind of like if I bought it right here, right at the bottom of the range, right? Somewhere in there. So I like that purchase. And if I were to get assigned, I would just go ahead and I will actually consider this one. It depends on how far I would go down, but I really feel good about this one. But that doesn't necessarily mean anything. But if it were to go down, I have to reevaluate. Most likely I'll sell calls against it, or I might just say, you know what, I'm out. Okay, and just kind of chalk up at a loss. But my cost basis, $47 for the most part. And I'm going to get out at 51. I'm feeling pretty good about that trade. And let's just say I bought it at 5,000, right? So 5,000, I'm going to make 100. If it goes to 51, I'll make $100, right? And then I sold it for $2.95, so that's $3.95. Right, $3.85. I'm sorry, because I sold that 51 for $2.85 plus the $1 that I would get just from going 50 to 51. All right, so $3.85. 385 divided by 5,000 equals 7%. I would make 7% on my money in 20 days. Man, you do that every 20 days, and you're gonna be a multi-millionaire in no time. Okay, so it's the little trades that can make you win. I think you should go for some home runs here and there, but really focus on the little trades. And next thing you know, you'll look at your portfolio and be, oh shit, I got some money in there. It's actually growing. Yeah, because you're just kind of nibbling, right? You're just nibbling. And for the most part, these trades, I don't got to look at shit. I just kind of sit back and relax, and I don't got to, pull up this chart and that chart and see what's popping and dropping and all that stuff. I just kind of lay back and just try to collect that money, try to collect that premium. All right, so that's it. Oh, let's talk about Rocket real quick, because I've been talking about it. I had a pretty good day today. I'm still feeling confident about it. I like the price action today, and let's see what happens. I'm feeling pretty good. I'm just keeping an eye on this thing, just waiting for it to get that big pop. I think when we get that big day, that might be the day you can say, well, I'll just put it this way. That might be the day it starts to rocket. It starts to take off, kind of like it did way back here in the beginning. Waiting for a day like that. Look at the volume, right? Look at the volume for the week. Okay, see, I need to zoom in on that so y'all can see. Yeah, look at that volume. So not bad. Not bad. I think we possibly going somewhere with Rocket. All right, so that's the video, and I hope you enjoyed it. I haven't done a video this style in a while. I've been going live, but I actually like doing videos like this. So, hey, you tell me what you like. You like videos like this? You like going live? What do you think? Put it in the comments below. Let me know if you like the Rocket trade, if you like the DraftKings trade, if you like letter X, man. Everything in that metal in mine is on fire. I almost think that every single pullback is a buying opportunity, and that's what I did today. So thanks for watching. I'm Dre Trades. You hit me up on Twitter, Dre Trades, Instagram, Dre Trades, right here in any comment and on any video, and I'll get back to you as soon as possible. Thanks for watching. It's Dre Trades, and I'm out.